has, and now we're cooking up almost 50 points on the Dow. GM up about 7% now in a big snapback. The NASDAQ up almost 30. We've got about 11 minutes to go before the closing bell.
Home construction tumbled at double the rate expected last month. U.S. industrial production surged and unemployment slipped to the lowest level in 6 months. Let's see what the bulls and bears think about all that data. Our bull is Bill Naskovitz, portfolio manager for Heartland Funds. Who is that behind you there? You got a little someone over your shoulder?
This is Mr. Bull.
Okay.
Mr. Bull.
He looks very friendly. Our bear is Peter Schiff, president of Euro Pacific Capital. Welcome to you both. Thanks so much for joining us. You know, I'll start with our bull. You thought that housing news was positive for the U.S. economy. Why is that?
Well, it's a case of right now bad news, bad economic news is good news for interest rates, meaning that Dr. Greenspan and the folks at the Fed should relent and take their foot off the monetary brake and not raise interest rates anymore. They want to kill housing. It looks as if they've succeeded. Housing is definitely rolling over, and interest rates probably are at their peak in this cycle.
Peter, would you agree with that? Are these home builders just building homes they can't sell?
Well, I think so. I think one of the main reasons that the home builders are building homes right now is to maintain the illusion that there's actually going to be a market for these homes so that they can continue to sell shares in record amounts. I agree with the other guest on one point. I do think there's plenty of anecdotal evidence that the housing market has peaked. But what I see happening with housing prices is I think the rise was unprecedented. And I think the entire economy has been built on the shaky foundation of the housing bubble. And I think when it crumbles, it will bring not only the economy but the stock market down with it. But where I disagree with your guest is on interest rates. I think
that argument seems to make sense to me. Why do you think that doesn't work?
Well, I think interest rates are going a lot higher because I think inflation is a lot higher. And I think if you look at the two-day rise in gold, $18 move up in the price of gold, the world's savers are beginning to lose confidence, finally, in central bankers. And I think people are starting to see through this charade of the CPI and the core CPI and appreciating that inflation is a very real threat. And savers are going to demand increasingly higher rates of return to be compensated for the risks of holding fiat currencies, particularly the U.S. dollar.
But, Bill, it sounds like you would disagree with that. I mean, don't you think that the dollar has more room to rise here?
Well, let's forget the dollar. Let's just talk about interest rates right now. We've got a 4.6% 10-year Treasury yield, and that is higher than most rates around the globe. For example, Italy, last time I looked, is bankrupt, and their 10-year Treasury is at 3.5. France is under civil strife, and their 10 years at 3.5. Okay? Interest rates are low, and they're going to stay low because there's tremendous liquidity, tremendous demand for fixed income investments, especially treasuries around the globe. I don't really know what the dollar is going to do next week or next year, but I know that our treasury bonds are in demand. The last auction was oversubscribed, if I'm not mistaken, by 2.8 times, something like that. Our rates are low. That's bullish for stocks. The Fed has been increasing interest rates now for almost a year and a half. Come December 12th, it'll be a year and a half, 12 increases. If they increase again, it'll be the 13th. They've overstayed the course. Historically, their average increase has been about 14 months. So it's time to relent.
But, Bill, Citibank put out a study today basically saying that this avian flu was going to just be a pox on our whole economy. Don't you think that could cast a pall on your bullish sentiment?
Well, let's get back to, I don't know if avian flu is around or not. The point is, let's get back to basics. We've had 14 quarters, 14 consecutive quarters of double-digit profit growth. Right, Mr. Bull? 14 quarters. You can call me Mr. Bill. This is Mr. Bull. 14 quarters of double-digit earnings growth, and we're probably going to have another up quarter this quarter. The S&P has never earned as much money as they're earning now. That's $80 probably the next 12 months, maybe 83 for next year. We're selling at only 15 times earnings.
Yeah, the problem is, though.
Yeah, Peter, you got to get in there. I think Bill's calling you a big dummy.
That's a 6.6% earnings yield.
Problem is, you know, they're achieving those earnings in a bubble economy. You know, you're talking about the fact that there's a lot of liquidity out there. There is, and that's part of the problem. Central banks are creating it. If you're looking at demand that came out of this week's Treasury auction, over half the bonds were bought by foreign central banks who are literally printing money to buy U.S. Treasuries. I think this is phony demand. I don't think there's real private demand beyond some speculative demand recently, as evidenced by the record amount of debt that we accumulated to foreigners last month. But this demand is going to dry up. And when you're talking about the rate on the 10-year of 4.6. So far, year to date, the CPI is rising at a 4.9% rate, even if you believe the government's phony data. So even with the government's data, the 10-year is still yielding less than the rate of inflation. And, of course, when you factor in the taxes you have to pay on the interest, there's still a big negative yield there. There's nobody in their right mind that will be buying these bonds.
All right, thanks you guys so much. I think Peter gets the last word there. Thanks so much to our bull and bear, Peter Schiff and Bill Naskovitz.
Too bullish.
Yes.
Oh, boy. All right.
He's like Kramer.
You allowed to bring a friend, though? I mean, tag team the poor guy?
It's like 2-on-1, yeah.
All right, 6 minutes left. Almost 50 points up on the Dow, almost 30 points on the NASDAQ.
We're coming right back with the closing countdown.